All right, everyone, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, give the video a thumbs up, subscribe to the channel, like the content. Come find Jason on Patreon, one of the best deals out there in the macro space, in the metals and commodities investing spaces. If you're interested in swing trading alerts and analysis, come find me right here on carnivoretrades.com. Anyways, here, let's get into it. So it was a fairly sideways week on Wall Street, pretty much all week long. And after the rally last week, the big surge off the lows, we covered that in last week's video. You know, markets really just paused, which is very normal after a big up move or even a big down move. When you have a big surge like this, and if we go to the weekly time frame here, you can see, obviously we had this falling wedge pattern. I was telling you guys about this for weeks here. We got down, and I said, you know, the market's just too oversold. It's got to, you know, we have to have a bear rally coming up pretty soon. A lot of levels we're hitting on many assets. And of course, we got the big surge, and we erased 1, 2, 3 weeks of downside, and you closed above this low here. So you erased a little bit more than 3 weeks of downside, maybe 3.25 in 1 week. So it's very typical here for there to be a pause, and you can see. You know, you kind of went into these little pivots here. It's 420 area. Didn't quite get up there. The high of the week was 417.44 on the SPY. But, you know, ultimately, it's a pause candle. You have a big move and then an inside candle. Also, you reclaimed the 100-week moving average, and you were able to, you know, it tested it, and it held. So, all things considered, if we flip back over to the daily, you can see that, you know, we moved up, and now we have kind of a bullish inside bar, kind of bull flag pattern here. So markets currently are still positioned for a potential A, B, C move up. Now, however, my concern here is we had kind of an attempted breakout on Thursday, and you can see this really across the board. You know, triple Qs here. Look at that surge there on Thursday. Diamond here, Dow Jones surged on Thursday. Russell 2000, same thing, big surge on Thursday. And we gapped down on Friday, and we actually sold off a little bit. If we look on the intraday, you know, gap down, a little bit of a rollover, and then kind of sideways. It's not the end of the world. Like, obviously, this pattern is still perfectly fine. My problem is that when you have a breakout and you close above these, you know, above the highs here, you want to see some follow through there. And it tells you that sellers are still coming in. We got some news. There were some downgrades on Friday. A lot of that was probably some game playing. Morgan Stanley downgraded Apple. It just seemed kind of fishy to me. I think a lot of it had to do with the weekly OPEX. You can see here, if we flip back to the intraday, look at what they did with Tesla. They gapped it down and then just pushed it sideways all day long. That's very typical OPEX, you know, option burning type of manipulation that goes on. So a lot of it may just be OPEX games, but for me personally, I've closed out most of my longs, and I'm pretty much in all cash. So, you know, we made some nice money with Carnivore Trades, you know, off the surge off the lows. And I was really looking for a move higher here, and I still think we can get one before the next kind of bear leg happens. But at this point, to me, it's not really worth the upside risk. I think we have upside maybe to, I know we have upside to probably 425. I know sellers will come in there. It's a matter of, do we make a higher low off of that, and then do we go test this 435 area? I think that's very, very highly possible. But at this point, the upside risk isn't really worth it to me. Now we're kind of like in the middle here. So we're kind of here. Here's where your max resistance would be in my view, and then here's your support. So you're kind of midway between that. So you're in no man's land, really. And just that move on Friday, I would have felt better about it if we had closed up here. You know, if we had opened flat to negative, tested, and then came back up by the close, I would have felt a lot better about it. But I just don't like that kind of soft rollover there in the market. Again, doesn't necessarily break the pattern. And if you look at the weekly here, again, the weekly is more dominant. This is still just a pause candle. Same thing with the triple Qs here. A nice little pause candle. You know, the Russell as well. And here, the Russell's actually still outperforming. And you actually have kind of a bullish hammer candle. So a surge and then a bullish hammer is, you know, a nice pause. We also had light volume this week for the most part, and the decline Friday came on light volume. Look how light the volume was there on the Russell. Same thing on the spiders and triple Qs. It was slightly heavier here because Apple took it down. But, you know, when you have a sell-off on light volume after a, you know, a good bullish move, usually it means it's just consolidation. But at this point, like I said, I just don't think it's totally worth the risk to be highly exposed here. In any case, let's flip over and do our sectors here. So we covered the main indices, semiconductors here. Again, nice little up move here. You got above that 50 moving average. Couldn't close above it by the end of the week though. But again, look at how powerful of a pop you got on Thursday, and really just, you know, gave back almost all those gains on Friday. But again, the weekly time frame, you know, same kind of thing, big surge and then a pause candle. So not terribly broken, nothing really wrong here. IGV kind of bucked the trend here, so cloud software got an even better surge than most sectors on Thursday, and really didn't sell off that much on Friday. A lot of that was due to, actually really all of it was due to CRM. So Salesforce reported, and they were one of the one of the companies that actually did well this week, or this earnings season. And they report late, obviously, but a nice pop on Wednesday, sold off a little bit, and then you actually surged above that on Friday. So it not only did it hold the gains, but it actually, you know, eclipsed the gains from Wednesday. Another little pause candle, so that helped out the cloud stocks, helped out tech a little bit. Dow Transports, again, same thing, move up off the lows, 1-2 pullback, pop, and then kind of just an inside candle here. So nothing terrible. You know, if these stocks can consolidate and these sectors can consolidate a little bit more, there, you know, you've got a good chance to make this 50 moving average minor, and you've got a good chance for a pop here. But at this point, I think it's prudent to be guarded here, especially since we did a good job of calling this bottom. There's no need to get greedy in this market. A bear market will punish you for being greedy. So I think that's the smart play here. Anyways, let's go look at the TNX 10-year Treasury yield. So last week I was showing you this kind of potential, well, it was a triggered head and shoulders pattern. So here's your shoulder head and then a small right shoulder. That did fail here. Actually, let's fix that line. So it went right there, and that failed on Wednesday. So we closed above that. However, you still have the potential for one here. So with this this lower kind of little double bottom, if we were to roll over, that could still trigger, and that would take you down to about 2.5. That's kind of the area that I've been telling you guys I think yields want to go to in the near term. It doesn't mean they can't push higher eventually, but I think they just got too overbought in too short of a period of time. So we'll see if that does play out here. TYX, the 30-year, has held up better, and that's helped out financials, and it's helped the really anything financials, and it's helped out kind of the bond market, and helped stocks to kind of cool off as the yield curve hasn't flattened as much. But it did run into that red bar, and you got a little bit of a tail candle on Friday as it did pull back. Rates did get a little bit of a lift earlier this week, or excuse me, on Friday, with the jobs number coming off, you know, a little bit, you know, market not really liking it as much, as essentially it has suggested that rates could go higher, with the market moving the way it did. Anyways, HYG, so high yield debt. Again, now this was a 5% move off the lows here, which is a massive move for bonds in general, but especially high yield debt. You know, we got above that 50, and then, you know, a little pullback pattern, still holding this green bar low. Notice how it went into that pivot low. This is where, you know, you bounced, and then you broke down. So that's getting back tested. And now here's the real question: can it put in a higher low? If it can, then, you know, I think you got a good chance to get up to maybe 81.50 or so, fill this gap. At that 100 is going to be strong resistance right here. There's a lot of resistance at 81.50, 82. But if high yield debt does hold up here, that will give the market a lift, and will give it an upside bias. We talked about financials and the yield curve. XLF, again, same thing, just like everything else. Nice move up off the lows and a little inside candle on the weekly. So fins are holding up, and nothing too terrible going on here. Another thing is financials have been leading to an extent. They've been outperforming a little bit, and when I see that, it's usually a good sign. Another thing I forgot to talk about just briefly here to mention, I talked about the NASDAQ. One of the reasons that turned me a little bit more neutral, as opposed to, you know, kind of wanting to hold my long positions into the weekend, was the fact that the NASDAQ, from pretty much the 20th of May when we bottomed, all the way up until Thursday, the NASDAQ was outperforming the S&P, the Russell, and the Dow. On Friday, the NASDAQ outperformed all the indices to the downside. So it was the leader to the downside. And when I see that, it's usually not a good indicator. I want to see the Dow down the most or the spiders down the most, and I want to see the Russell and the NASDAQ leading. The Russell did lead, but the NASDAQ, the weakness there was a bit of a turnoff. So up until Friday morning, financials and the NASDAQ were leading, and that kind of changed a little bit on Friday, which gave me a little bit of a sour kind of feeling going into the weekend. So just wanted to note that there as well. Anyways, let's move on to energy. So crude. Again, I believe last week I mentioned, I know I mentioned it on my channel, but these higher lows were starting to turn this chart a little bit more bullish. I know over the past couple of weeks or months I've been saying I'd like crude to go down and test 85. I just think that it would be a good area for kind of a corrective move. Everybody's really long energy right now, and that's kind of my only concern. So I would like to see it go down there and hit 85. I think that's just a good area of support. And it would really kind of shake out those weak hands because you're now starting to get a little overbought here. But the chart's holding up, and you can't really say anything against it. You're above all four major moving averages, and we were able to negate these three lower highs that we had going on here. So the chart's in good shape. 125 is going to be resistance. I told you guys for a long time, if we get up above these pivots, 120 is going to be resistance. We got there Wednesday, pulled back off of that, and then we actually had a surge. So the energy markets close at 3 p.m. And this move right here at 3 p.m. here actually happened after hours. So technically after hours, we had a little bid in the oil market. So interesting little tidbit there. But 125 is going to be your breakdown. That's going to be your massive resistance area. I think it can get up there, but you're probably going to get a good reaction there. So just be aware of that. Gasoline hit another all-time high here. So again, this is getting really extended. It's overbought, but you got to respect it right now. These commodities can go higher than people think, especially when they get they get into parabolic mode. But again, is it overbought? Yes. Is it extended? Yes. But you got to respect it. I did notice in my area, gas did come down a little bit today. I noticed it was at 4.95 at this one gas station by my house. It dropped down to 4.79 here. So I'm not sure if any of you guys can comment on this, but there was maybe a little bit of regional relief for some of us out there. I know when we had this big sell-off here, there was no relief. Prices actually went up in March around where I live, even after this sell-off, and they've been going up the whole time. But I just noticed today they dropped by about 16 cents, so a big move. So maybe you guys can comment and tell me if you guys got any regional relief for you. But in any case, gasoline at all-time highs here and continuing to be strong. XLE and XOP and OIH, you can see here. On Tuesday, it was holiday shortened trading week. We had a nice reversal candle. You see Chevron here, an engulfing reversal. Exxon, just about an engulfing reversal there. But they recovered by the end of the week. And again, the jobs number basically kind of put the inflation trade back on, which essentially is the reason why the NASDAQ kind of lagged on Friday as yields up, tech down. That was sort of the trade, but what can you say? Energy is holding up really well. Nat gas, bit of a quiet week here. You had a little sell-off on Tuesday, recovered some of that, and now you're just kind of chopping here sideways. Still inside of this green bar. If you close below that, and you get below that 20, and you lose this green bar, it'll go down to the 50 moving average. You'll have a speed bump at the 50 moving average, and I think it retest 7. That's where I would be looking to possibly swing trade this. I do like that level here. That trend line has been, pretty much money here the last couple of months. Nice trend line to follow. And then if it gets through that, you got a nice level here at 650. And it's also, you got that 100 moving average up sloping. So one would think by the time, if it were to sell off there sharply, that would be a good area of support. And I know that's a big move, 9 to 650, but look at the move you've had since really the beginning of the year. I mean, you've tripled literally since the beginning of the year, or almost tripled, 3.5 to almost $10. So these moves can happen, and these volatile commodities can move that fast. So it certainly is a possibility. All right. Anyways, so let's talk about CCJ, uranium. We'll cover that quickly. Told you guys last week it was going to have resistance at about 26.25. A high of the week was 26.20. So we got right up there. Basically coincides with that 50 moving average, 26.37. That's where that sits. If this consolidates again, $28, just underneath that, is going to be good resistance on CCJ. So that will be your upside target if it can move there. And again, if the markets hold up and we have that leg up, like I was mentioning, that's probably where it will go. URNM did not quite get up to that 75 handle that I said would be resistance. But this, in all fairness, CCJ does outperform these ETFs. So it is a little bit of a laggard, but that's where it will go if we get that next leg up. SRUUF had a couple of pops earlier this week. This is a thin ETF, so that can happen, but spot uranium did go from about 47 to 50 bucks at the end of the week. So that did move up a little bit there. So energy and uranium specifically trying to hold up here, but still below all this chop here. So it is, it does have some resistance overhead, like I said with CCJ, this area here. And, obviously all these charts are pretty much the same, but those are the levels there. These potash plays, so IPI and MOS have kind of disappointed a little bit. I thought they'd have a good shot. We came down, hit this 20 moving average in an oversold condition, short-term oversold. Usually you get a really good bounce off of that, and that did not quite happen, and now we're starting to flag sideways. So, these, MOS, let's take a look at this. So this could be, chopping here to get through that 20. So I know the potash plays they've got really good fundamentals here going on, and there's supply problems, but, perhaps these energy costs are starting to hurt some of these companies. Maybe that's the case. I don't know. I just know that technically they should be holding up, and they're starting to put in some weekly chop here that looks somewhat bearish to me here in the short term. So we'll keep an eye on that, and we'll see what we get next week. Dollar index here. So continue to pull back, and now it's chopping sideways. So got a little bit of bid on Wednesday. We told, I said that 50 moving average would be support. That's basically what happened. It held up, got a bounce, reversed on Thursday, and then still inside of the reversal bar from Thursday to Friday here. Basically what I've been saying is if we go down here and start going sideways, we're probably going to get a backtrack to about 100, and then 99 would be a really big level on the dollar. So if this looks to consolidate a little bit further, it probably will go down to those levels again. Even with the pullback here on the dollar, look at how extended it is still from just the 20-week moving average. So your 20-week moving average is at 99.50 right now. A simple return to that is, about a 3% move. That's a big move for the dollar index. So if it were to go down there, if it were to break this 50, that's where I think it wants to go. But in any case, basically a sideways week here. And the weakness in the dollar has helped out gold. Gold getting a nice pop on Thursday. And gold's kind of traded a little bit one-to-one with the stock market lately. So that's something I've noticed. So look at how we bottomed here on, the 16th of May. And then the spiders bottomed on the 20th. So right around the same time, and then gold had an up move with the markets and now is going sideways. So interesting little correlation there. I don't know if it lasts for too long, but gold's holding up. If it flags a little bit more, again, I would have liked it to not have this little potential breakout bar because I don't think it was ready to break out, and that's why you got that reversal Friday. But if this consolidates a little bit more, I'd give it the upside bias to 1900. GDX did have a nice day Thursday, reversed a lot of that. Lost that 200 moving average, so that was stiff resistance there at that gap window. And silver, same kind of thing. It tried to push up Thursday and reversed Friday, but still it's off the lows. And if it consolidates, it can move higher. The one thing I like about silver is SILJ got a nice surge on Thursday, and it held a lot of those gains on Friday. So nothing terrible there. I'd like to see that consolidate as well. And then maybe you can go up there and attack that 13 handle. So nice move there for SILJ. Platinum also monster move. Look at this little trend line here. You could make a case it's an inverse head and shoulders. It's a little bit steep for my liking, but a nice pattern. If it is an inverse head and shoulders, you've got to move probably to about, you could really get up to about 1080, 1100 here. So that's a big move there for platinum. It doesn't, it's not going to go there in a straight line, but it's going to have to consolidate. But nice move there for platinum. Palladium, on the other hand, on the weaker side, closing with a little weakness on Friday and still below this trend line here. So that trend line's been tough resistance for palladium. Another metal that ran hard this week was copper. Big move there for copper. Was up over 5% on Thursday, which, as you guys know, is a massive move for copper. It's, this isn't a tech stock, right? Big move for a commodity with a large market cap. It did pull off the highs a little bit on Friday. and you closed below that 20-week moving average, but you got back above the 50-week, and you held most of the gains on Friday. So again, a big move. No surprise it had to retrace a little bit, and it will have to flag some more to get through all this breakdown chop here, but a nice move for copper. And, you know, I was saying if this flags up a little bit, it can get up to 445, maybe 450, and it got through that on Thursday before closing at 448 on the week. So nice move there for copper. Anyways, let's get over to Bitcoin. Lastly here, so really the big thing here with Bitcoin is it does seem partially decoupled from the market, or at least it's underperforming so much that it's almost kind of a lagging indicator at this point. It was a leading indicator up until the Terra Luna blow up, but big picture here, if we zoom out, this is bearish chop. You know, I thought it had a nice chance of getting a move up here. There's like I said, there's a lot of demand in this candle. But the problem is the longer you chop here, the weaker this candle will get. So if we go down and attack that after chopping for several weeks, that candle is not going to offer as much buying demand as it normally would. Now, it's not ready to break down yet, and I still think there's a good chance if you hold this green bar low, which is at 29,295.86, if it, you know, as long as it holds above that on a closing basis, it can still move up to possibly 34,000, but I think that's about it. Previously, I said 36, maybe 38. I don't think it has that much in it right now. It's very soft, and even inside of this green bar, you have a bearish inside bar. So I just don't like the move here on Bitcoin. Ether's not showing much strength as well, actually closing below this green bar here. And, you know, originally I said there was a lot of demand inside of this candle. We got a nice pop, a nice retrace pop, but it has not been able to hold the gains. So I'm not in love with crypto right now. I think ultimately it's bearish here. Doesn't mean it can't get a little bit, maybe try and test that 50 moving average, which would coincide with these pivots up here. But crypto does look a little on the weaker side to me. Anyways, guys, to wrap it up here, spiders and the market in general, again, I still give it a good upside bias, especially if it can coil a little bit more. And if you also look at volatility here, volatility did break through these. You had kind of like a mini little trend line here earlier this week. You broke through that, and then on Thursday you closed below this pivot, and Friday it was also, you know, it was positive by 7 cents, which is nothing for the VIX, but it still closed below this pivot here on a weekly basis. So I would give the VIX the downside bias to maybe 23, and that would be kind of coinciding with this trend line here. And, you know, you've got this 200 moving average right there, so that would be a good bounce area. But overall, I just don't really like the price action Thursday to Friday. I don't like the underperformance in the NASDAQ, even though there was a lot of other things that kind of negated that, especially the weekly chart being a nice little pullback pattern here, pretty much across the board, especially the Russell. But at this point at this point in time, I think it's wise to just be really neutral, and I don't really trust bulls or bears at the current time. Anyways, guys, I'm gonna wrap it up here. Take care. Come find Jason on Patreon. Come find me on carnivoretrades.com, and I will talk to you all next week.